Hello, everyone, and welcome to Ticker.com's news channel on YouTube. On this channel, we review stock markets, discuss financial news, market trends, and economic data. With our weekly updates, investors can stay current with news that matters, stocks that rise or fall, and companies that shine or shock. From Wall Street to Global Street, we help you analyze news and information that may impact your portfolio. So let's dive in. As we do every week, we start with the economy and then proceed to stock markets, and then to stocks, and then we look at upcoming economic releases. So we're going to start looking at the economic data that were released this week. Well, this week, the U.S. trade deficit expanded, China's trade surplus declined, Eurozone entered into a technical recession, Japan's first quarter GDP was revised higher, and three central banks announced their key rate decisions. So let's review this more closely. The U.S. trade deficit expanded in April to $74.6 billion from $60.6 billion in March, whereas in China, the trade surplus declined in May to $65.8 billion from $90.2 billion in April. In other news in China, the consumer price inflation barely increased to 0.2% in May, and the producer price index, which is a measure of wholesale inflation, declined 4.6%, the sharpest decline in 7 years and the eighth monthly decline in a row. So while the Western countries are fighting sky-high inflation between 6 and 10% a year, China is struggling with inflation largely because of the lack of demand. In other news, Japan's first quarter GDP was revised higher to 2.7% on an annual basis from the preliminary estimate of 1.6%. This is good news for Japan after decades and decades of stagnation, whereas the gross domestic product or economic growth in the Eurozone is not very good. The first quarter economic growth was estimated to decline 0.1%, matching the same level in the final quarter of 2022. Moving on to the other news in the week, Bank of Canada lifted its policy rate by 25 basis points to 4.75%. The Reserve Bank of Australia increased its policy rates by 25 basis points to 5.9%, and the Reserve Bank of India increased its policy rate, or rather held its policy rate at 6.5%. So three major central banks around the world announced their rate decision. Moving on to other economic news in the week, there were two global economic growth projections were released, first by the World Bank and the second by the OECD. The World Bank, in its latest global economic growth projection, estimated the global economic growth to increase by 2.4% from the previous estimate of 1.7%. The bank also trimmed its 2024 growth projections to 2.4% from the previous estimate of 2.7%. The OECD report is a little bit more optimistic about the global economic growth. The organization estimates the 2023 growth to be 2.7% and the growth in 2024 to be about 2.9%. So let's review in details a little bit about the Global Economic Prospects report released by the World Bank. The World Bank had also economic projections for the United States. The U.S. economy is expected to sharply decline to 1.1% in 2023 from 2.1% in 2022. And the report also noted some of the critical hurdles and challenges the U.S. economy has. And I'm going to read that from a short paragraph from the report that will give you the insights that will help you understand what the World Bank thinks about the U.S. economy. In the United States, the growth is expected to weaken significantly through 2023 and 24, mainly as a result of the lagged effects of the sharp rise in policy rates over the past year and a half, aimed at bringing down the highest inflation rate since the early 80s. Model-based estimates show that the peak impact on the growth from this tightening is likely to take place in 2023. In other words, the bank is estimating that multiple rate hikes are finally beginning to bite and take effect sometimes this year, maybe second quarter, maybe third quarter, but the impacts will be finally felt, and that will slow down the economy. The OECD report Also, as you can see on the next slide, shows that India and China are expected to grow faster than all other economies, major economies in the world, and the European economies are expected to struggle between 0 and 2% growth rate, or mostly 1% growth rate. In fact, India is the only country that is expected to grow faster than 6% in 2023 and 24. Moving on to the other information that was also released by the Eurostat, the statistical agency of the European Union. And as you can see, there's a broad diversity in the economic growth rates within the Eurozone in the first quarter. As I said earlier before, that the Eurozone economy contracted by 0.1%, but within the Eurozone member nations, Poland and Luxembourg are growing at more than 2-3%, whereas Ireland and Lithuania are contracting. There's a big distribution range in the economic growth within the region. Now we are moving on to the second part of our segment of our presentation or discussion, which is the stock markets. Investors around the world have shifted their focus after the passage of Debt Ceiling Act and winding down of the earnings season. The focus is shifting back to the interest rates and the rate path, especially when the U.S. stocks are trading at 9-month high. European markets are hovering near record highs. The Nikkei 225 index in Tokyo is trading at 33-year high, and indices in India are approaching record high. So let's review these data a little bit more closely as you see it on the next slide. The S&P 500 index increased 0.6% in the last week and extended its year-to-date gain to 12.7%. The Nasdaq Composite Index increased 0.4% and extended its year-to-date gain to 28.1%. The European indices struggle with negative performances in the week, but German index increased 13.5% so far in the year, and CAC 40 in Paris jumped 9.2%. But the FTSE 100 index in London is barely breaking even this year. The Nikkei index soared 1.2% in the week and extended whopping 25.5% gain in Japan, whereas the Sensex index in India declined and trimmed its year-to-date gain to 2.4%. You can review more about the global indices and how they are doing on a daily, weekly, or monthly basis on this page on ticker.com. There are more than 80 indices that you can track on a weekly, daily, or monthly basis. In the merger news, there was one merger news that is expected to impact golf industry significantly. The Saudi Arabia-based Live Golf has been in kind of a fighting mode with the US-based PGA tours, and finally they both decided to set their differences aside and just get merged. So the Saudi Arabia-based Live Golf and the United Arab Emirates-backed DP World Tour agreed to merge with the US-based PGA tours. This is going to create one dominant industry that is going to have an impact around the world in the golf sport. So this is something that cannot be ignored. Moving on to the third section of our discussion, which is stocks. Tesla extended its 2023 gains to almost 125% on the back of the sales optimism in China and its deal with General Motors for charging stations. Apple also traded at new record high and extended its gain in the year to 45% after it announced new products during its annual event. The subsidiary of Intel, Mobileye, is planning to sell 35 million shares in a secondary offering, taking advantage of the recent run-up in the semiconductor stocks in the market. The earnings-related announcements also impacted some of the companies. Thor Industries, the maker of RV, recreational vehicles, actually soared, not because they announced better sales or better earnings, but their sales declined less than anticipated and losses were also smaller than anticipated. Similarly, database developer GitLab also reported better than quarterly results, largely because the sales were ahead of expectations. The specialty apparel retailer Zara's parent Inditex, based in Spain, also was in focus after it reported positive sales growth and also estimated positive sales growth momentum to continue for the remainder of the year. Then now looking at the stocks on the downside, You have Coinbase, the operator of the cryptocurrency trading platform. The SEC alleged that the company is operating as an unregistered broker. In fact, after the announcement, the stock almost dropped 20%. Also, Signet Jewelers, which owns Zales, Blue Nile, and K Jewelers, also declined after it reported a decline in earnings and also forecasted weak sales to continue for the rest of the year. The restaurant chain operator Cracker Barrel also declined on the weak sales outlook. The video game retailer GameStop also reported weak quarterly earnings, but more importantly, it also fired its chief executive. After the announcement, the stock dropped almost 20%. On this page, you can see the stocks that are up and the stocks that are down significantly this week. You can get more detail or an expanded list of stocks that are moving on a daily basis on ticker.com. We have a section where we track stocks that are moving significantly up or significantly down, and that can help you to keep up with the corporate developments or earnings related announcements. Moving on to the last part of our discussion, which is the upcoming economic releases. This Tuesday, U.S. consumer price inflation is going to be released, and on Wednesday, U.S. producer price inflation is also going to be released. And the U.S. Federal Reserve is scheduled to release its rate decision and decide or let us know what is its view on the interest rate. As you can see on this table, the Fed has raised interest rate 10 times in a row since March of last year. And the rates have gone up almost 500 basis points from nearly zero to almost 5.25%. The Fed funds have jumped quite a bit. The debate between the investors is, will the rates go up at this meeting? Some investors are hoping that rates will go up by 25 basis points and then the Fed will pause, where some investors are hoping that the Fed has already raised interest rates enough, but the effects of those interest rates are still not felt in the economy, and there is no need to raise more rates anymore. So they are hoping for the rates to pause at this meeting. We'll find that out on June 14, where the Fed is heading. So that's all we have this week, and the next week we'll cover what happens in the stock market, economy, corporate earnings, and anything that may be impacting your portfolio. Thank you.